Hey, what's going on, guys? Look, tax secret or tax mistake. I think this is number three. So look, we're talking about qualified business income. Are you familiar with that term? All right, so qualified business income. This is a new term that recently came out with the Tax Cuts and Jobs Act of 2017, and I'm gonna try and leave out all of the crazy accounting and tax language so that you can understand this. So look, if you are in a business, service business, or really in a non-service business, other than like accounting, like me, taxes, being a lawyer, a doctor, an athlete, an actor, folks that have to use their image or their skill as the main source of revenue, then, this part of this can work for you, but there's some other crazy things that we have to kind of work through to see how much you would benefit from this qualified business income deduction, actually, which is 20%. So imagine this. You've got a great business. You had net income of about $400,000, right? So you got $400,000 and you are a sole proprietor. As a sole proprietor with no wages, because you didn't pay anybody and maybe you didn't really have any assets, you actually get zero. You get nothing of this qualified business income deduction, which is 20%. So look, what if now we use a tax secret? We convert your business into an LLC or a corporation, which either of the two you can elect to be an S corporation. So once we elect for you to be an S corporation, then you have to have reasonable compensation. And so maybe, we don't know what the reasonableness of your business is. So we'll just say, the reasonable compensation of this amount of income for this type of business is, say, $100,000. So now you take $100,000. Look, and I'm just kind of running some numbers off the top of my head. The self-employment taxes on the $400,000 was somewhere in the $26,000 range. Now, when you do the $100,000 of reasonable salary, your payroll taxes are only going to be somewhere around $15,000. Look at that. Now we're talking about just over $10,000 savings just because you switched up your business entity. So, and we're going to talk about entities in another mistake. But here's the thing. You just saved $10,000 by making one change. You change how you report the way that you do business. But that's not it. So the qualified business income deduction, which is the section 199A, what you now do is that you'll be able to take a 20% deduction on your net income. So now your net income is, I think, $300,000. It's coming out of that business, and you get to deduct 20% of that $300,000. Now, here's the thing. There's a few other calculations we have to make. How many assets you have, a few other things with calculating your total payroll, and so. But here's the thing. You just got 20% deduction from the Section 199. You also saved an additional $10,000 just because you decided to report it a little bit different. So it pays to do some planning here, guys. That's the moral of the story. If you wait to go see your tax preparer, your tax advisor, in January, I'd say January, not even April. If you wait to January, you're going to miss. You're going to miss out on this, and you're going to overpay your taxes at least probably $30,000 plus. Now, would you like to do that, or would you like to pocket that for yourself? All right, so look, if you want to pocket that for yourself, then I suggest you get with your tax advisor. You can even contact me if you want. Get with your tax advisor. Get with somebody that can help you. And if you need someone, that can help you, you can definitely click the link, in this email or somewhere around where this video is, where you're watching it, and then you can schedule a call and we can discuss your situation. All right, so guys, look, don't miss out on the qualified business income, because there's a deduction of 20% that you can get when you have it. All right, guys, so I hope you got value from this quick video. I look forward to seeing you on the next video program. Take care.